Now on to the next video, timeframes and stop loss placement. Interesting one. So I'm going to start with timeframes firstly and foremost. So on the next video actually there's a nice Astro Forex roundup which is going to put a few things into perspective and wrap everything up that we've gone through thus far. Now time frame wise, you know the processes of the monthly, weekly, daily and 4 hour, that never will change. Now everybody has a different trading, a different lifestyle, different routine, work commitments, business commitments, educational commitments, whatever it may be. So we can only really adapt the market and looking at the markets, analyzing and even trading around our current lifestyle. Okay, some people have a lot more time on their hands and so on. This also comes down to the characteristics of the actual person as well. Are you more of a patient person? Do you want to get more actively involved in the markets and so on? If you are more patient, then you're going to be looking at executing mainly on the daily 4 hour. If you want to come into the intraday, maybe 2 hour, 1 hour, maybe even 30-minute. I don't really recommend the 30-minute, but 1 hour and 2 hour as well. Those time frames obviously require a lot more time at the chart in particular. So what I'm going to introduce to you guys is the 8 hour time frame. For those people who are kind of at the medium point, they don't have all the time in the world to look at the markets. However, you know, they don't have a limited time either. So those with a limited time and have work commitments and whatnot, maybe work long hours, your main point of analysis and point of call is going to come from the daily time frame and the 4 hour. If we just step in between with the 8 hour time frame, the 8 hour time frame is actually very, very beneficial, as it gives us free time throughout the day to actually study the price action, the candle formations, any previous trade setups we already have, even some of the moving average calls as well, those strategies. It really gives us a chance to look at the higher perspective, but we don't have to stick to every day. And it is also beneficial for those who want a deeper look into the market. I found the 8 hour time frame. So we get 8, 16, 24. We have 3 variables in the day to actually base trades from that time frame as well, rather than the daily. Me personally now, I already have in my head what the monthly's done, the weekly's done. I switch in between the daily and the 4 hour, so I'll look at the daily and the 8 hour, sorry. So at the end of the day, 10:30 p.m. London time, I'll be watching for what the daily's done, how the day's performed. Then I'll be looking at my watch list. Again, I've already gone over the pairs and the information in which can really transform the way you look at the charts by choosing one out of Euro USD, Pound, Dollar and Aussie Dollar. Just pick one of those, pick one exotic pair and one yen pair. Once you get that locked down, everything becomes more simplified and you really come into the structure and routine that benefits you financially, benefits you mentally, because it eradicates so much stress. And implementing the 8 hour time frame doesn't limit you to saying to yourself, oh, you know what, yesterday wasn't too good, or yesterday I can't really work out what was going on, or I need more confirmation. The 8 hour time frame actually gives you a helping hand with that. So on the 8 hour, over here on the Euro USD, if I just pull this over, before any of this happened, we were expecting highs. I am expecting euros to come up to 1.2 very soon. You could even do it today. But for instance, I established that we had an A, B, C move, and we're waiting for D now up here. But an entry example could have been on this 8 hour time frame, which you wouldn't have seen on the daily. Breaker above the moving average over here, breaker above the moving average over here in the direction of the overall trend. Then we have 8, 16, 24, etc., etc. Breaker over here as well. And then we had the uprise, that was last Friday. That was a closure of the Friday, and we actually hit 1.1925 and created a new high past this over here as well. So guys, 8 hour time frame is something that you want to actually go in and have a look at, regardless of your work routine. But for those who again have limited chart time, it really will help you, because you can just time yourself throughout the day. Okay, the 8 hour candle's closed, let me see what it's done. And we're always following our general rules of key levels, market structure, moving averages and so on. So check out the 8 hour time frame, and again, if you are using the split screens, keep it on this side and then keep your 4 hour, 2 hour, hourly, whichever is your favored time frame on the left hand side for ease of access and clarity. What I just want to also briefly touch on are the stop loss placements for some of these trade setups. So guys, if you are using, okay, remember we don't execute on the monthly or the weekly, we come into the daily. If you're using any of the, so let's say you're using a Fibonacci. Fib now, I solely stick to this one fib level, this fib region. At the end of Fibonacci, if you haven't watched it, please go and watch. We put the Fibonacci on. I've took off the 50 and the 38.2, and I've only got one target there as well, minus 27. If you're trading from a Fibonacci region, your stop is going 15 pips below the 78.6, standard. Stays there. A little bit of breathing room, targets up there. You're always going to get a great risk reward. Obviously, when you get more advanced, some of you guys already are, you mix in this strategy up with the high highs, high lows, the MAs. Are the MAs in your favor? Do we have room to the upside? And so forth. So the Fibonacci stop loss will always remain the same. If you're trading based from any candlestick formation, so for instance, bullish engulfing, we have one here. Okay, this candlestick, let me just remove the Fibonacci for a second. The bullish engulfing candlestick formation, so we have these two here. So this one's engulfed the previous one. Alright, the formation low is actually here though. And that's quite rare because we've got a bullish engulfing right here and the formation low is just here. What I mean by formation low is the lowest point of that formation. It's a 2-candle formation, so I'm looking at the spike here. Here we have a low, there we have a low. So let's just take this one into consideration. Bullish engulfing, it's off our support. We're looking at higher prices to the upside anyway due to our top-down analysis. We've also came in and broke out a trend line. What we can then do is line up a long position. Okay, so let's say we entered after the bullish engulfing formation. The formation low is here. So the rule is 15 to 30 pips on the opposite side of the candle. So obviously we're going to be going long. So here the market is 1.1740. My preference is 25. So we go 30, 20, 1.17, 15. There's a breathing room, and then we're going to be taking it. You know, we can use that fib target if you will, or it's already hit target 1, the higher highs. This is target 1 at 1. It's a risk reward ratio 1 to 1.9, 94 pips stop. 112 pip target. I'm expecting up here now as well. So any candlestick formation, guys, whether it be a bullish engulfing, a 3-pin formation, a shooting stars as well. Let's see if I can find a shooting star quickly. I have to find one against the trend as an example if I can. Shooting star, shooting star, shooting star. Okay, so there's a nice one over here. This is also an MA breaker. See the MAs broke below it here. And broke below it here as well. So any MA breaker, well actually MA breaker or the MA rebound, the bounce, the breaker we can go in on a breakout candle. So let me just finish off this shooting star first. So short position, we are getting in at the closure of the body, which is right here. So the high of this formation is right there at 1.1200. Let's just round that off. So 25 pips above 1.1225. Then target, let's say next area of support there as well. So we can keep our stops generally quite tight overall. So the same, you know, as you learn the formations and whatnot, it's the same stop loss rule which applies, 15 to 30 pips on the opposite side. Now, if you take into consideration the MA breaker, so we have an MA breaker here and here as well, it's the same concept. With the MA breaker in particular, which I do want everybody to more or less divert their energy and focus to, because these you're going to enter at the, once the bottom right, remember, the candle is closed below the blue moving average, and we're expecting downside, we've done our top-down analysis, there's room to go. That breakout candle, the stop is going on the opposite side of this, and I've covered this on the moving average videos, and I will be covering this in the webinars as well. So the same thing, we have one there. I don't really like the price action on the euro back there, but we can go over here. Okay, so MAs are up monthly, weekly, daily at the time. Here we have 3-pin, 1, 2, and 3. 3-pin formation as well, guys. I did cover this on the video, but the lower the formation, which is obviously always going to be the middle candle. So that's what 1.1313, 25 pips below that. Measure that there. We have another one here as well, 1, 2, 3. This formation and this formation are mapping out higher lows. So nice tight stop below. And even if it is just a moving average bounce, let's say we just considered this one and this one, this is a bullish engulfing against this here, that's the lower the formation. So you'll enter after the rebound, because remember the ATMA is a key area of support, and your stop is going 15 to 30 pips on the opposite end. So there's various entry strategies that we're going to be using, but the fib's great. The moving average breaker, the moving average bounce are absolutely brilliant. If I look over here on the euro, there's 18 minutes on this candle, right? What we can see is a pin to the MA on this 2-hour time frame, but also we're edging higher. I am expecting euro to come to here, so 1.2. So we have around 55 pips to the upside. Now, with that being said, this is a bullish engulfing. It's engulfed 1, 2. Spike to the MA, spike to the MA, and it's also come off our key level of support, which was resistance. Once this candle closes in 18 minutes, this is the actual setup. The actual setup, simple. We'll get in at the closure of the candle, right? Stop on this because it's just that one formation out. Or if we consider it as a bullish engulfing, that's the low of the formation right there. So 1.1922, we can do it 1.1898. There's your stop. In total, that's 50 pips, and there's our first target right there. That just makes a 1-to-1 risk reward, 49 pips stop for a 58 pip target. So risk reward of 1-to-1, 2-hour time frame in the direction of the overall trend from a moving average bounce. That is how that would come through. A couple other examples perhaps. So let's have a look at GBP AUD at the moment. We're reversing from these low levels. I have the previous day high and lows on here as well. A nice breaker today was this one. So we came up, we broke above the ADMA. Would have been an entry here long, and this was the breaker candle. So the lows of the breaker candle, 1.6218, 25 pips below that. So looking at 1.6193. Breathing room, that could be target 1, target 2, and so forth. As you can see, market's chopping around a little bit, but it is kind of getting there. It's kind of getting there. And then over here, because again, we can use the same strategies on each time frame. So that was a 2-hour. This is the 4-hour. This is an example of what I went over on the moving average video of being a trend reversal. So obviously the MAs have been down for a while. We had lower lows, lower highs, lower lows. But after a lower low has been printed, we're now expecting a rebound. So because I'm expecting a rebound, what do we do? For a trend directional change after a lower low or higher high has been formed on a daily, we're looking at this on the 4-hour. So we've got the MA crossover on the 4-hour as well, and then there's the breaker there too. So the breaker, nice green candle above, there's a closure, stop 25 pips below, and as you can see, this is carrying it into profit right now. I'm expecting GA to come quite high. GBP JPY, an example could be, I've gone over this already on the MA videos, but looking here, what's happened recently on this 8-hour time frame is we've had a breaker above. There could be an entry long, stops below this candle. So remember, if you are using the 8-hour time frame or a daily time frame, the stops are going to be generally bigger. We have one here, opportunity here as well, because we are still riding above the MA, and then here we have a huge bullish engulfing 1 and 2. So if you take this formation, if we entered here at the closure of that 8-hour candle, the lower the formation is there where the longest wick is, 140.42, 25 pips below that, and so on. You get the picture by now. So each time frame has its own stop loss amount, but the system and the strategy remains the same. So finally, if we come over here onto the 2-hour, today a great 2-hour setup would have been this. Bullish engulfing 1, 2. Can you see the moving averages are up? The formation low would be here. Nice breathing room, and you would have been carried into profit there as well. So guys, please lock down the MA strat, utilizing it with the moving averages, utilizing it with any of the candle formations, and the only difference is the Fibonacci is going to be that set rule behind the 78.6 time and time again. So have a play around with the 8-hour time frame, find what's best for you, solidify. Let's go on to the next video where we go through all of these points now, and put all of this into perspective as to what we've done so far. And our aim is to keep it simple but powerful. Nice risk rewards, looking at the overall trend direction, that's the most important. That's what's going to take the longest. Journal, journal, journal. Lock down your currencies. One of the majors, one exotic, one yen pair. That's it.